Hi friends, welcome back to my YouTube channel. Today in this video, we are going to learn about one of the most discussed topics in the times. Personally, I have come across a lot of people asking which tax regime for the upcoming financial year 23-24. Just to clear out the air, let us understand the basics of old and new tax regimes. Fundamentally, what is old tax regime and what is new tax regime? Old tax regime is basically a tax regime prescribed in the Finance Act of every assessment year. For the ongoing assessment year 2004, the tax regimes, the slab rates for individual taxation prescribed in the Finance Act 2023, whereas new tax regime is prescribed inside the Income Tax Act itself under Section 150 of the Income Tax Act 1960. Fundamentally, old tax regime will be the tax regime described in the Finance Act of the respective assessment years, and the new tax regime described in Section 150 PAC of the Income Tax Act 1991. Since we are understanding the basics, let us also understand the tax slabs prescribed in both the tax regimes. So, as we all know, under the old tax regime, up to 2.5 lakhs, which we call as basic exemption, there will be no tax levied. From 2.5 lakhs, 5 lakh rupees, tax will be levied at the rate of 5%. From 5 lakhs to 10 lakhs, tax rate will be 20%, and any income above 10 lakh will be taxed at the rate of 30%. And the slab rates under new tax regime described in Section 150 PAC of the Income Tax Act, up to 3 lakh rupees, there will be no tax. So the lakh rupees of taxable income will become our basic exemption limit for the purpose of new tax regime. From 3 lakhs to 6 lakh rupees, tax rate will be 5%. 6 lakh to 9 lakh will be 10%. 9 lakhs to 12 lakhs will be 15%. 12 lakhs to 15 lakhs will be 20%. And any income above 15 lakhs will be taxed at the rate of 30%. Now let us understand what are the common deductions or exemptions that are usually availed by the taxpayers across salary bracket, but that are not allowable under the new tax regime, but it is available for those who opt for old tax regime. First one being leave travel allowance exemption, for which is available under section 10 clause 5. HRA, which is the house rent allowance, available under section 10 clause 13A. Perquisites, again to meet the personal expenses of the salaried employee, which is allowable under section 10 clause 14. There is another exemption available under 10 clause 32 with respect to clubbed income of minor in the hands of the parents up to rupees 1500 per child. Another deduction that is not allowable under new tax regime is under section clause 3 with respect to professional tax. Deduction under section 24 clause B with respect to any interest paid on housing loan with respect to self-occupied property. Interest paid on housing loan against let out property is still allowable under new tax regime. And most importantly, any deduction under chapter 6A that is usually availed by all taxpayers under section 80C, 80D, 80CCD, subclause 1, 80 TTA, 80 TTB, all these deductions are not allowable under the new tax regime. All these deductions and exemptions are still allowable under the old tax regime. There were numerous beneficial amendments that were brought in the new tax regime in budget 2023 that is applicable for financial year 23-24. First one being rebate under section 87A available up to 25,000. That is to mean that any income below 7 lakh rupees, any tax that is being calculated on income below 7 lakh rupees, there will be a rebate of 100% of such tax under section. This would effectively mean that if a person having taxable 7 lakh rupees need not pay any tax under the new tax regime. The 87A rebate benefit in the existing or the old tax regime is still rupees 5 lakh rupees. The second amendment being marginal relief for any marginal or a small amount of income that is exceed 7 lakh rupees. I would like to explain this by giving an example. Now let us understand this marginal relief with a simple example. A person earns an income of taxable income of 7 lakhs. Rebate under section 87A is available up to a taxable income of 7 lakhs. Total tax payable will be nil. Whatever tax being calculated on 7 lakhs is available for rebate under section 87A, and tax amount will be 0. Let us say another person earns an income of 7 lakh 10,000. Just 10,000 above 7 lakhs. 87 rebate is available only if taxable income is less than 7. A person earning 7 lakh 10,000 will not get the benefit of rebate under section 7A. So we will need to calculate the tax on the 7 lakh 10,000, pay our taxes. Discussed, up to 3 lakhs there won't be any tax payable. To 6 lakhs on the bracket of 3 lakh rupees, pay tax at the rate of 5%. On the amount of 3 lakhs, 5% would amount to 15,000 rupees. From 3 lakhs, from 6 lakhs to 9 lakhs, the tax bracket is 10%. So from 6 lakhs to 7 lakh 10,000, the income will be chargeable at the rate of 10%, 7,000. Total tax payable on an income of 7 lakh 10,000 will be 26,000 rupees. So imagine a person just because of earning 10,000 extra income over and above 7 lakhs ends up paying an additional tax of 26,000. If your income is 7 lakhs, tax is 0. If your income is 7 lakh 10,000, tax will be 20,000. Because of this disparity, there is a concept called marginal relief available for any marginal income over and above 7 lakh rupees. So as per the provision, any difference in the marginal income will be the tax payable of the individual. So any income above 7 lakhs, which is 10,000 in our example, will be the tax payable under the new tax regime and not. So whatever additional tax over and above the difference between income above 7 lakhs will be considered as marginal relief, and only the income above 7 lakhs will be the tax payable. This is one amendment that is being brought in the Finance Act 2023. One more very important point is that standard deduction of 50,000, which was available under section clause 1A, is now extended to new tax regime as well. Before, this beneficial standard deduction was available only to taxpayers opting for old tax regime. Now it is being extended to new tax regime. Also, corresponding family pension deduction that is available under section 7 clause 2A is extended to new tax regime. 7(2)(a) exemption is available for those who are earning family pension. The deduction amount is 1/3 of the family pension receipt of 15,000, whichever is less. One more important point to note is that until AY 23-24, new tax regime was available only for individual taxpayers and HUF taxpayers. Now the benefit under 115 AC is extended to artificial juridical persons, association persons, and body of individuals, except cooperative society. One of the most important amendments, one of the most beneficial amendments that is being brought is the maximum surcharge that is being capped at 25%. As we all know, any above 5 crore rupees will suffer a surcharge of 37% for individuals. But if the individual opts for new tax regime, his maximum surcharge will be capped at 25%. Beyond 5 crores, the surcharge percentage would still remain 25% and not 37%. And from assessment year 24-25 onwards, new tax regime will opt as the default tax regime for all individuals. If the individual wants to opt for old tax regime, the person will have to file a prescribed form, then opt for old tax regime. And one of the most common questions asked to us is that, let us say for the purpose of declaration that is being given to the employer, we opt for new tax regime. Is there an option for us to choose old tax regime at the time of filing the income tax return? The answer is absolutely yes. Any declaration that you give to the employer is not your final decision regarding choice of tax regimes. At the time of filing your income tax return, you consolidate all your incomes and deductions. Whichever regime is beneficial for you, you can opt at the time of filing, and the declaration that you give to the employer in the month of April will not be your final tax regime as per income tax provision. Now, coming to the most important part of our discussion, what is the break-even deduction amount based on which I have to opt for old tax regime or new tax regime as the case may be. So here is a illustrative chart of income range and break-even deduction limit based on which you can decide whether old tax regime is beneficial for you or new tax regime is beneficial. For the purpose of our viewers, let us take a couple of examples and decide whether old tax regime is beneficial or new tax regime is beneficial. Let us take the example of 10 lakh rupees. Let us your income at 10 lakh rupees. This is before standard deduction, because now standard deduction is available for both old and new tax regime. Let us say your income is 10 lakh rupees, and as per the chart, the break-even deduction amount is 3 lakh rupees, including standard deduction of 50,000 rupees. So after considering the deductions, your taxable income as per the old tax regime will be 7 lakh rupees, because under the old tax regime you will have the option of availing all the deductions and exemptions. On 7 lakh rupees, up to 5 lakh rupees, tax will be 12,500. Beyond 5 lakhs, tax will be at the rate of 20%, 40,000 rupees. So under the old tax regime, your total tax payable will be 2,500. Now let us understand how this break-even deduction limit. So under the new tax regime, the only deduction that is available is the standard deduction of 50,000 rupees. So your taxable income will be 9,50,000 rupees. What will be the tax on this 9,50,000 rupees? Up to 3 lakh rupees, 0. 3 lakhs to 6 lakhs, tax at the rate of 5%, which will make 15,000. From 6 lakhs to 9 lakhs, tax is at the rate of 10%, comes to 1,000. From 9 lakhs to 9 lakh 50, tax is at the rate of 15%. The tax amount comes to 7,500. We add up all the three, our tax payable comes to 52,500, which is equal to the tax payable under old tax regime. So what do we understand from this? If our exemption or deduction amount in standard deduction is more than 3 lakhs, it is beneficial for us to opt for old tax regime. If the deduction amount is less than 3 lakhs, it is beneficial for us to opt for new tax regime. Let us prove it with our example. Let us take our income 10 lakhs and deduction amount as 2 lakhs. It is less than rupees 3 lakhs. So under old tax regime, taxable income is 8 lakhs, on which tax will be 72,500. Under new tax regime, we will get deduction only of 50,000. 9,50,000 rupees, we have already calculated the tax amount, which comes to 52,500. Now, since the deduction amount is less than 3 lakh rupees, new tax regime will be beneficial for us. Let us take another example. Some 10 lakhs, deduction amount is 4 lakhs, which is more than rupees 3 lakhs. So the taxable amount under old tax regime will be 6 lakhs. The tax payable on that will just be 32,500 as against 52,500 under the new tax regime. So what is the conclusion that we can arrive out of this? check your income range and check your break-even deductions limit. If your deduction amount is exceeding the break-even deductions provided here, go for old tax regime. If it is less than the break-even deduction limit, you have to choose tax regime. This is the conclusion that we can arrive at. So hope this video was helpful for you. If you find it helpful, share it with your friends, your family, and help everyone decide which is the most beneficial tax regime for them. And if you like this video, click the like button, hit the subscribe button, and stay tuned for more videos. Thank you.